We're talking with Navy veteran Ray Garfield, co-founder of Garfield Public Private. Ray, you're doing some great things in land development and creative financing for all that. Really look forward to talking about that. Before we get to talking about business and entrepreneurship, take us back and tell us what you did in the Navy.
Uh, okay, Joe, we graduated from the Naval Academy a long time ago. Immediately went into flight school. I got my wings. Wanted to be a multi-engine anti-submarine warfare aviator. So I ended up flying S-2 trackers, which flew off the carrier, and also the P-2V Neptune, which was a predecessor to the P-3 Orion. And so was in a couple of squadrons, lots of flight time, and also the training that they give you as a officer in your squadron with the collateral duties. Enjoyed it greatly. Ended up getting out of the Navy a little bit earlier than I expected. After about 4.5 years, ended up injuring my knee, and 6 months later, I was a civilian disabled vet. So the transition into civilian life wasn't necessarily something that I planned a long time for, but it was there. So actually coming out of Bethesda Naval Hospital, I thought, well, I'll probably go to work for Chance Vault, Lane Timco Vault, but aviation companies with my aeronautical background, right? You're a pilot, you know. And I ended up sitting down on a plane with a member of Ross Perot's board of directors and his fledgling little company called Electronic Data Systems at the time. And I became one of the first 300 members of that firm.
Really?
Yeah.
Wow.
And I was just immediately into civilian life on a payroll of an emerging company that would make Ross Perot a billionaire. And ended up basically writing the book on recruiting for him. I managed his recruiting division, which was essentially the sales position in his company, because we grew so fast. I was all over the country for the first 2 years, actually traveling or flying more for Perot than I did when I was a pilot in the Navy. So I was given an opportunity to take over one of his subsidiaries. The board member that was responsible for me in recruiting said, "No, I don't want to lose you." I thought I'd done everything to deserve this next promotion. And I said, I'm going to go do something else. So that got me into real estate. I had family, sort of a family business, but I didn't join the family. I just selected a boutique commercial real estate brokerage and investment firm, and started searching for good pieces of land to invest in and syndicate. So
what do you mean by syndicate land?
So we'd find a great piece of property in the path of development and the path of growth, and then put it under contract, and then go out and get investors to buy this property with us. So I found a major corner in North Dallas, a couple of miles north of where all the development was happening, still owned by a farmer. We'd come in, talk to the farmer about buying his property. The idea is to leverage it properly, hold it, and then sell it for a profit. So we were a very active syndication firm, bringing high net worth individuals, captains of industry that wanted to put their money, diversify their money out of necessarily stocks, bonds, but in real estate. So just like you'd find a warehouse or a shopping center or an apartment building that you'd want to buy, we would syndicate it, putting 10 people into a partnership to own a particular piece of property, hold it, and then sell it a few years later. So it was a immediate way to dive into the pool and learn how to work within a business that would lead to a career.
Yeah.
Uh,
It's bringing a lot of different people together for a common goal. It's a lot of coordination.
yeah, absolutely. And, I mean, I had the opportunity to select early on what I wanted to do. In going into real estate per se, you could become a tenant broker, you know, putting companies in office buildings or in industrial buildings. And you could specialize in marketing apartment buildings. Those are all honorable, good uh, pieces of this real estate umbrella, this huge industry. But I started out, wanting to buy major blocks of land, leverage them properly, and then and maybe get them sold, um, and hold them until utilities got there or they were ready to go, and then sell them for a profit. Was successful enough that after several years, I received an offer from Merrill Lynch to sell the company. So we sold our company to Merrill Lynch, and all of a sudden I was carrying a Merrill Lynch commercial real estate business card instead of my own company's business card. And that was really an eye opener because I was able to latch on to 5, 10, 15, $20 million deals as Garfield Corporation. And I was able to latch on to $100 million deals and above when I was carrying a Merrill Lynch card. So,
Yeah. Wow.
yeah. Anyway, it was, you know, the evolution into real estate took several steps. That first 2 years with Perot helped me learn how to interview people, how to select top flight candidates, and lead them in roles, which certainly helped me in my real estate business.
Yeah.
So I cherish those 2 years.
Can
But
I
then the
can I
real
ask you a little
yeah,
bit about like what it was like working for Ross Perot, especially in the early days?
uh,
Curious
great
about that.
question. Uh, he was quite a dynamic guy, as everyone remembers. Um, and he was a driven individual, very focused. Went, as a top salesman for IBM, they, you know, they wouldn't promote him fast enough, so he started his own company. And before you know it, he took it public and became what was then known as the fastest, richest Texan ever. Yeah, that was a title on Fortune magazine,
Huh.
the month before I joined him. So uh, it was interesting, and uh, but a little cute little story. When I was offered this role to move from managing all the recruiting nationally to taking over as head of what was their insurance uh, uh, service company, their beta division, where they were developing software for major insurance companies.
Mm-hmm.
My particular reporting boss was on the board of directors, and he said, "Ray, I can't lose you, so you're going to have to stay running my recruiting department." And so I took my first 2 weeks vacation in 2 years, and I interviewed 15 real estate firms again because my family was in the business and they helped me target them. I came back in and resigned, and they said, no, we got to talk to you. Because Ross was a Naval Academy graduate.
Yeah.
His next, there were several of us in that firm. So he called me into his office and he said, "Ray," he said, "what are you going to do?" And because I did ask him to let me go on and run that insurance business. And he said, "I can't overrule so-and-so." I said, "Well, I'm going to go into real estate." And he said, "Real estate?" He said, "That's just a bunch of old ladies driving 4-year-old Cadillacs." So if of course, now he's got one of the most successful real estate companies. Well, of course, he's passed away, but his son runs Alliance Airport over in Fort Worth and has Hillwood, and they're just major league in real estate. So interesting. At the moment in time, he thought that that software and computers was everything. But as years went on, real estate became a big part of their own family. So, but anyway, he was, he was had a lot of vision, a lot of drive, and developed a great company, and was special to work for. When I did. But you know what? You get out of the Navy. I got out. I had a new wife, two little kids, and traveling every single week for 2 years. I just worked a hardship on us. And, I sat down and talked to my wife, and she said, I'd love it if you could be around. And so I said, yeah. And real estate then certainly was defined as local in nature. So I dove into real estate and learned it. And, once my kids were at a certain age, I'd learned enough. And with the sale of my company to Merrill Lynch, I was traveling again, but at a time when our family could handle my being away for a week or two at a time. Anyway, it's just an interesting evolution of how that happened.
Hold that thought, Ray. We're going to take a quick break. Be right back.
Sure.
Okay, so we're back talking with Navy veteran Ray Garfield, co-founder of Garfield Public Private. So Ray, you sold your company to Merrill Lynch, so now you're carrying around a Merrill Lynch business card. Things are still going well. Ultimately, you moved on and eventually got to Garfield Public Private. So walk us through the timeline on that.
Yeah, and it's really interesting because it seemed like every 4 years, a different opportunity would come along, another step up. So I stepped from Merrill Lynch to what was then in the late 1980s, the King of Wall Street, which was Salomon Brothers. And Salomon Brothers invented mortgage securities. First, they invented residential mortgage securities, and then in the mid to late 80s, when I joined them, we were creating the first commercial mortgage securities that were done in the country. And so I worked for a guy named Lou Ranieri, and you've seen movies and read books about that industry that he created. And so I ended up helping to finance probably $8 billion worth of real estate in the 4 years that I worked with Salomon Brothers. Had a great opportunity to move to a Rockefeller company and ran the western half of the U.S. For Cushman and Wakefield, which the Rockefellers owned at the time, and in their financial services division. And again, with that 4-year cycle, I got a call from the fellows that had recruited me at Merrill Lynch, and they were looking for a chairman and CEO of a public company. A company was coming out of a major bankruptcy, and I was able to relocate back to Dallas and take over running a company called Vista Properties. It was part of the largest mortgage company in the country, Lomas, which had gone bankrupt in around 1989. Came in and was able to turn that company around, and then in 1996 we merged it with Syntex Corporation, Syntex Balfour Beatty, and it was just a hugely successful, very complex tax merger. We had $1.5 billion in built-in losses from the previous bankruptcy. that we were able to transfer over to Syntex at the time successfully. All of that, the financial structuring at Solomon Brothers, the working through this exit from bankruptcy and corporate merger, was sort of, I'll use my air quotes, get my PhD in finance, if you will.
Yeah.
And that's what caused me to start the company that we have now, which is Garfield Public Private. In 1997, the year after I made that merger from Vista to Syntex, I created this company and immediately worked with the largest general contractor in the nation who wanted to expand and create a more profitable portion of the business for themselves, design, build. And we focused on the public sector. When I say the public sector, this huge contractor was building skyscrapers all over the country, from New York to California and globally, actually. But the opportunity presented itself to do smarter, better work for the public sector, for cities, counties, state agencies, universities, healthcare campuses, airport authorities, anything in this sort of a giant global public definition, if you will. So at that time, if you want a job to build a courthouse, to build a city hall, to build a classroom for a K through 12 school district, you had to pick an architect first, design it, then put all the designs out for bid to a number of contractors and accept the low bidder. And the results were disastrous, blown budgets, blown schedules.
Yep.
So we and this contractor that I work with wanted to give them more certainty, more quality in execution. So going from what was then known as design, bid, build, litigate, and occupy, we went to this design build program. And where the contractor's involved at an early stage, he can guarantee the price and guarantee the schedule of developing these huge buildings. And so that brought certainty of financing, certainty of execution, delivery that was much needed at the time. And that really was the evolution of Garfield Public Private. We're not a contractor, we're not an architect, we're really a process manager. We certainly have the capital markets experience to be able to bring those things to the table. So Joe, if you look at, my military training was great. People ask me, well, what did they teach you at the Naval Academy that enabled you to do what you're doing today?
Yeah.
Oh, the disciplines, not the coursework. So it just evolved. I selected an industry. I learned the first plateau, and I grew to the second plateau. And I think that's what every young person that is getting, or even not necessarily young, but maybe even somebody in the middle age that spends 10 or 15 or 20 years in the military and wants to transition into civilian life needs to, basically think about, is to plan that next step thoughtfully, prepare for it, pick the right niche, the right industry niche, and get into it with the idea that you're going to do just what you did in the military, and that's learn and advance. So, it's been one of the exciting parts about my particular career.
Yeah. So where is Garfield Public Private at nowadays? Like, give us an idea on some numbers, like perspective as far as size of the company or size of the projects, number of the projects you guys have accomplished.
Our average developments around the country probably are in the $100 million range. We're developing right now probably $500 million a year. We're working nationally. We're in Florida where you are. We're working there. We're headquartered in Texas, which is a great state to be headquartered in. It's so business friendly,
Yeah.
Progressive. We're working in Missouri. We're working in California. So we do about $500 million a year in deliveries on this, and looking to continue to grow that. I mean, I'd love to be delivering $1 billion a year, and hopefully in a few years, my son will be doing that. He's a partner with me in our firm. So we're just using all of the things that we've learned over the years in terms of now working with general contractors, with architects, engineers, consultants, the top hotels in the company. We're really well known for doing convention centers and headquarters hotels, performing arts centers, arenas, expo centers, in partnership with our public clients. So if they need desperately a new courthouse, they don't have a public referendum approved by the voters to sell bonds to do it, but they got to get their judges out of a 50-year-old building into a safe building. Then we're there to work with their financial advisors, with their bond counsels, with underwriters, and certainly with the architects and builders. But you got to finance them before you can build them. And so we bring this sort of financial expertise to the table to collaborate with their capital advisors on getting the right ownership and finance structure so that they can then put into action the designing and construction of the building.
Not many people work at the high level that you guys are at. My next question to you is going to be, where does the money come from on the size of a project like that? And you were starting to partially answer that, but could you go into a little more detail with that? Like maybe an example of a recent project, and investors can only do so much. You referenced a bond campaign that maybe they couldn't do or didn't have yet. So where do you get the creative financing ideas?
Now, for one thing, we try to work with highly rated public clients. So a city that's rated single A, double A, or triple A by Standard and Poor's or Moody's or Fitch. And it could be a university. It could be, a state agency. We did the Department of Transportation Region 1 headquarters for the state of New York. So when you look at it, you're looking at creating sort of a partnership. If it's a fully occupied government building like the DOT headquarters in New York or the Atlanta courthouse, then you're really looking at underwriting the state of New York or the city of Atlanta. If you're looking at doing something that a highly rated client needs, like a convention center and a headquarters hotel, then we're going to bring private capital and combine it with public investment. So if I did $100 million hotel, we might need 30 or 40 million from our public client. They'd sell 30 to 40 million in their own public back bonds. And then we'd be left with filling the gap, and we'd work with Wall Street, with JP Morgan or with Truist or with Goldman Sachs or Morgan Stanley. They would underwrite the private bonds and strive to get the private bonds rated as well. Now, they're not going to get rated AAA or AA like our public client, but they'll get rated BBB or BB. So big investors in the capital markets will buy those bonds. Those bonds will be syndicated, just like the city bonds are sold to 100 different buyers. Our private bonds are also sold to buyers that want a higher yield. So you have a lower interest rate when they're AAA bonds by the city, and then you've got that may be 3%, and then you'll buy our bonds at 4%, which are also rated but rated lower. So, but they're really capital markets transactions, and they're typically tax exempt bonds because everything we're doing really is for a public agency. So we want to set up a not-for-profit to own the building and sort of keep it off the balance sheet of those public clients. Anyway, each deal, believe me, each deal is different. We do
Yeah.
a school for Los Angeles or a courthouse for Atlanta or a performing arts center for Durham, North Carolina. Those are three massively different developments, and the capital structures are certainly different as well.
Yeah. So when you're getting ready looking at starting the project and you set up the creative financing to how you think it's going to work, like, do you ever set up a deal and then nobody shows up to buy the bonds, or and you have to go back and come up with another creative way, or you pretty much at this point you get it, you know who's going to be interested in what you can do with it.
You know, we've never had a transaction fail. Not since I was a young land broker getting the business and trying to syndicate one piece of property in the wrong location. I just couldn't put it all together. But now when we're doing a venture public-private partnership with you name it, any AA or AAA rated city in the nation or state, um, we're working with their financial advisors. We're working with the best bond counsels in the nation, with the most respected underwriters or marketers that like Goldman Sachs or Morgan Stanley or whatever. So that's the certainty. Um, Now I say that, but public-private partnerships, it's a new genre of development, and many of our clients have never done it before. They're timid about doing it. They need to be brought along by their own independent advisors. So when we go to talk to a city, we encourage them, please invite your financial advisor to be here. Invite your bond counsel to be here because we want them to be in the discussion with us. We want them to tell us if they think we're wrong, tell us that we're wrong and let's go a different direction. So it, you know, we really have not come close to a failure in the last 27 years of having this company and doing what we do.
Yeah, that's amazing. Well, Ray, how do we find out more about Garfield Public Private?
Well, we certainly have a website. It's www.garfieldpublicprivate.com. And I think it's a pretty good website, and it talks about all the various developments that we've done and can do. Interestingly enough, we created a couple of years ago a new corporation called Garfield Clean Energy, and we are also working with our public clients to convert large pieces of land on their periphery that perhaps a city owns and has it under an agricultural lease,
Uh-huh.
farmers, and looking at turning that into solar and wind farms. And it has the opportunity to generate more lease revenue, much more lease revenue, when you're generating energy than if you're growing corn or cotton.
Yeah.
So the public-private business that we do lends itself to the new innovations in energy development as well. So, but yeah, we encourage people to certainly to reach out for us at our offices in Dallas, and certainly to look online at our website to get started.
Awesome. And
Okay.
Ray, I do want to give you the last word. We're about out of time. If you're talking to somebody in the military on their way out, looking to get into entrepreneurship, especially on the real estate side of things, what kind of advice comes to mind?
Well, first of all, if you're young in uh, your first years in the military, I think it's such a worthwhile profession. I'd advise my sons, my grandchildren, to 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 spend some time in the military. And if it's right, there's nothing wrong with making a career out of it.
Right.
But if you do want to make the leap from it, be thoughtful about it. Really get as much advice as you can in terms of making that leap out of the military and into civilian life. Pick the right industry for yourself. Whether you want to be a stockbroker or an insurance broker, or whether you want to be an entrepreneur and create a great software company.
Mm-hmm.
And again, our direction happened to be real estate. I was influenced because my family had been in it for a couple of generations, and that at least got me to take some night courses and prepare myself to step into a different industry. When you do it, know that you're not gonna be an overnight success. It takes a couple of years to see the money start to roll in, so you do need to prepare yourself to capitalize your venture for a couple of years. If you can find a firm that will put you on a draw or retainer of some kind, even if it's enough for subsistence, housing, and food. But stick with your program through easily the first year, 18 months, and into 2 years before you give up on that dream, because nobody makes it overnight. Well, maybe 1 in 1,000 makes it overnight, but
Right.
not many, right?
Well, yeah,
So,
absolutely.
yeah.
Well, Ray, thanks for sharing your phenomenal entrepreneurial success story, doing great things out there, and look forward to seeing your guys' future success.
Thanks, Joe. It's great to talk to you. Thanks for your service as well, and the good old great branch of the Navy, the Marine Corps.
I had to get that in there. Huh? All
I
right.
did. All
All
right.
right. Thanks,
Thank you so
Ray.
much. Righto.
Appreciate it. And all right, these two veterans are Oscar Mike.
All right. Thanks you.